So what does the Paris Agreement then mean for the oil industry going forward? Let's take a closer look at this with James Leeton, who's Head of Research at Carbon Tracker. Welcome to you. So are oil companies picking up the agenda here and being a little bit more open about their climate impact?
Well, there's a range of responses. I think we've seen in the US with Chevron and Exxon this week. There's some resistance to addressing this issue. It's still business as usual. It's still foot to the floor. There's going to be no dip in demand. Business as usual. You know, we can keep investing. And I think the important thing with the time frames you mentioned there is the dollars they put in now to get more oil out of the ground in the future. You know, there's a lag time. There's a few years before you're going to start seeing that oil coming out of the ground. So we need to be thinking, where are we going in 5, 10, 15, 20 years' time? You know, will the market still be the same? And
what you do is that you manage to apply metrics to companies in the same way that a financial analyst or an equity analyst would look at a company and say, look at its assets and look at its liabilities and so on. You're able to look at it in a rather different way.
Yeah, so we've been sort of transposing those climate targets that came out of Paris into what it means for capital investment for these companies, what it means for future demand for coal, for oil and gas. And really saying to the market, well, OK, does it make sense to keep investing so much in new projects? Should we tone it down a bit, dial it in a bit, or, you know, otherwise we'll end up wasting money?
Right, but if you're an oil company, what alternative do you have?
Well, we actually did some work to show that a smaller company could be worth more, because now you've got this volatile oil market with prices not at the level they were a couple of years ago. It doesn't make sense to bet on these high cost projects like the oil sands, like deep water, like the Arctic. You know, we've already seen the companies get burnt in those places.
But of course that would mean job losses, wouldn't it?
Well, we're also seeing huge growth in alternatives. You know, it is a transition. It's whether you judge the pace of that transition, you know, correctly. If you get, you know, major economies like China, like the US getting behind these new businesses, then, you know, other countries could get left behind.
Is there a risk, do you think, of oil companies now developing assets that are under the ground probably and then finding in 10, 20 years' time that actually these assets are worthless?
I mean, worthless might be a bit strong, but certainly, you know, shareholders want a return on their money, otherwise they may as well put it under the bed. So, you know, if all you're doing is getting your money back, that's not good enough. You know, these companies are not performing compared to the rest of the market. They haven't been for several years. The results this year have not been good for the majors.
Thank you very much indeed.